Hello viewers, welcome to my channel. I'm Hasham. So now in this video I'm continuing the provisions of Income Tax Act. Already last two videos I have completed the meaning of the term tax, characteristics of tax, types of tax, then classification, objectives of tax, basic concepts of income tax and canons of taxation. All these things I've already explained in the last video, very important for your examination point of view. If you have not watched that, I suggest you to go to the playlist of my channel. Select the subject Income Tax 1 for the assessment year 2021. Watch the first two videos, definitely you will get the basic introduction of income tax. Now in this video, I'm starting with two topics. The first topic is agricultural income. So very frequently in examination, they will ask the provisions of agricultural income in India. Tax on agricultural income in India. Secondly, income tax rules and exemptions. First of all, agricultural income. According to section 10, subsection 1 of the Income Tax Act 1961, agricultural income is exempted from tax. Agricultural income is exempted from tax under section 10, subsection 1. But agricultural income will be included in the total income for calculating the tax on non-agricultural income. For example, if a person is having only agricultural income, nothing else, only agricultural income, completely exempted, no tax at all. If a person is having agricultural income and also non-agricultural income, in that case, agricultural income will be included in the total income. To find out the tax on non-agricultural income, a specific provision is given by Income Tax Act how to calculate the tax liability when a person is having agricultural income and also non-agricultural income. So what is the reason why agricultural income is exempted from tax? The reason is this agricultural income is a state government subject. So Income Tax Act says the agricultural income is a state government subject. So they can implement, but Income Tax Act 1961 will not charge tax on agricultural income. So agricultural income is exempted from tax. So everybody wants to show that my income is agricultural income. I want the tax exemption. So Income Tax Act has given the conditions. When your income will be called as agricultural income, three conditions are given. First condition, rent or revenue should be derived from land. The rent or revenue should be derived from land. That is the first condition. Rent or revenue, the distinction is if Mr. X is the owner of agricultural land, he is a farmer, he is the owner of agricultural land, he is doing agricultural activities himself. So after growing the crops, growing the agricultural produce, he sold it and earned some revenue. So Income Tax Act says he has used the agricultural land for agricultural purpose, earned the revenue, it is agricultural income, exempted. Similarly, one person, Mr. X, is the owner of agricultural land, but he is not doing agricultural activities. He has let out the agricultural land to Mr. Y. So Mr. Y is growing the crops, he is doing agricultural activities. In that case, the revenue earned by Mr. Y is agricultural income. From that revenue, Mr. Y is paying rent to the landlord. Who is the landlord? Mr. X is the landlord. The rent received by Mr. X is an agricultural income. Revenue earned by Mr. Y is an agricultural income. That means rent or revenue derived from agricultural land. Both are agricultural income. Secondly, land must be used for agricultural purpose. For any income derived from land is not agricultural income. Any income derived from land is not agricultural income. The land must be used for agricultural purpose. To see whether what is this agricultural purpose? Two type of operations are there: basic operation and subsequent operation. The basic operation are the initial operation like cultivation, sowing the seeds, watering the plant. That means all the activities before the plant sprouts out from the earth, sprouts out from the land. So all the activities done by the farmer before the plant comes out of the ground are called basic operations. Subsequent operations, The subsequent operations are those activities which are performed after the plant sprouts out from the ground. That means the plant has come out from the ground. After coming out, the operations involved are putting the fertilizers, cutting, harvesting. All these things will come after plants are grown up. So the activities after plant grown up are called subsequent. The activities before the plant comes out of the ground are called basic operations. If a person performs basic operations as well as subsequent operations, his income is completely agriculture income. If a person performs only basic operations, his income is agriculture income. If a person performs only subsequent operations, his income is not agriculture income. His income is not agriculture income. So, if only basic operations or basic and subsequent operations, it is agriculture income. If only subsequent operations, it is non-agricultural income. That's all. Next comes land must be situated in India. That means the income earned from the land which is situated in India is only taxable. If agricultural income is earned outside India, then it is taxable income. It is non-agricultural income here. It is taxable income. So exempted income only if agricultural land is situated in India. So if these three basic conditions are satisfied, then the income derived will be called agricultural income. Otherwise it will be non-agricultural income. So in examination you may be asked a question regarding explain the provisions of Income Tax Act regarding agriculture income. So whatever I have explained just now, that will be more than enough. Now income tax rules and exemptions. See, income tax is a tax on income. When a person is having the income, there will be income tax. If a person does not have income, no income tax. So in India we have an act called Income Tax Act 1961. It has given elaborate provisions regarding how to put the tax on income. How to put a tax on the income of a person. Everybody is not liable to pay tax. The tax is applied only if a person's income is above the basic exemption limit, more than the basic exemption limit. This basic exemption limit every year will be declared by the Income Tax Act. So it will not remain constant. It may change. Year to year it will change. So for the current assessment year 2020-21, 2020-21, for the current assessment year, the basic exemption limit is 2,50,000 for a resident person. Right? So now I am going to explain you what are the basic exemption limit for different category of persons. Income Tax Act has divided all persons into three categories: non-senior citizen, senior citizen, and super senior citizen. First of all, non-senior citizen. A person who is below the age of 60 years, below the age of 60 years, he will be considered as non-senior. Basic exemption limit is 2,50,000 for the current assessment year 2021. So if a person's income is below 2,50,000, he is not liable to pay tax. No tax will be applied if the total income is below 2,50,000. Senior citizen. A person who is above 60 but up to 80. Above 60 but up to 80 years. Then 3 lakh rupees is the basic exemption limit. Then super senior person, 80 and above. If a person has reached the age of 80 years and above 80 years, super senior citizen, his basic exemption limit is 5 lakh. So 3 things you remember: non-senior, senior, super senior. Non-senior up to the age of 60 years. Up to the age of 60 years, 2,50,000 basic exemption limit. Over 60 years but up to 80 years, 3 lakh rupees is the basic exemption limit. Super senior, 80 and above, 5 lakh is the basic exemption limit for the current assessment year. Now, sources of income. Income Tax Act has explained the provisions, given the provisions regarding how to compute the income of a person. The income of a person is classified into 5 heads. according to the provisions of Income Tax Act. The 5 heads are income from salary, income from house property, profits and gains of business and profession, capital gains, income from other sources. The total income will be classified in the 5 heads. The Income Tax Act says the SSC has to find out his income falls in which of these 5 heads. His income will fall in salary income or house property income or profits and gains of business and profession or capital gain or income from other sources. 5 heads of income. Now, structure of tax for the current assessment year 2020-21. 2020-2021. What is the tax structure? I am going to explain you. The tax are basic income tax, surcharge and health and education cess. So first we need to calculate basic income tax. To the basic income tax we have to add the surcharge if it is applicable. Surcharge is not there for every SSC. I'll explain you. Already I have explained in the last video. Again I'll explain you in this video when the surcharge will be added. Right? So in a basic income tax plus surcharge we'll get the total tax. On that total tax add health and education cess. So health and education cess at the rate of 4%. At the rate of 4% we'll get the tax liability. So in this way we are going to calculate the tax basic income tax plus surcharge plus health and education cess. This health and education cess is compulsory, statutorily required. Every SSC, whoever SSC is having income tax, basic income tax, health and education cess we have to calculate. But surcharge may be there or may not be there. I'll tell you when. So health and education cess is at the rate of 4%. Then the tax due. How to find out the tax due? From the tax liability. After computing this tax liability, deduct TDS, tax deducted at source, or advance tax paid. These two are the already tax paid during the year. So before the assessment of income, already SSC have paid advance tax. Already TDS was made. So TDS and advance tax will be deducted from tax liability. From tax liability, deduct TDS, deduct advance tax, will get tax due. If TDS and advance tax paid is more than SSC will get refund of tax. Sometimes it may happen. Already TDS paid and advance tax paid is more than the tax liability. Then the tax liability, income tax department will refund the amount. Will refund the excess amount to the SSC. Now basic exemption. Income Tax Act has classified the SSCs into 2 categories. Resident and non-resident. For resident person, the basic exemption limit are 2,50,000, 3 lakh and 5 lakh. For resident person. And one more thing. If a person's status is ordinarily resident person, he has to pay the tax not only on Indian income but also on foreign income. Suppose Mr. X is ordinary resident person. So for Mr. X, all the income earned in India and income earned outside India, both will be taxable in India because he is ordinary resident. Suppose if a person is non-resident, he has to pay tax only on Indian income. Foreign income is not taxable for non-resident person. So here basic exemption limit. The basic exemption limit is 2,50,000 for every category of SSC in case of non-resident. If the residential status is non-resident, 2,50,000 is the basic exemption whether he is a non-senior, senior or super senior. The basic exemption limit is 2,50,000. But for resident person, non-senior 2,50,000, senior 3 lakh and super senior 5 lakh. That's all. Now I am going to explain you about types of incomes. We can broadly classify the incomes into 3 categories. Casual income, then special income and normal income. Casual income, the meaning I will explain in the next video. Casual income. On this casual income there is a flat rate of tax. Flat rate, and only one rate will be applied. Not more than one. Only one rate, flat rate will be applied for casual income. What is the rate of tax? I'll explain you in the next video. So casual income, flat rate, and no basic exemption will be given. For casual income, basic exemption is not allowed. Whatever casual income is earned, flat rate of tax will be paid. No basic exemption. For special incomes, again flat rate will be applied. Again flat rate, but basic exemption will be allowed. Basic exemption will be allowed. For normal incomes means any income which is neither casual income nor special income. Any income neither special nor casual, it is called normal income. For normal income, slab system is there. Slab system means up to 2,50,000 no tax. From 2,50,000 to 5 lakh a separate rate of tax. From 5 lakh to 10 lakh a separate rate of tax. Over 10 lakh rupees a separate. Different tax rates are applied. That is called slab system for normal. And basic exemption will be given. In the next video, I'll explain you more about normal incomes, special incomes and casual incomes. Now surcharge. I told you surcharge is an additional tax. It's a tax on tax. In examination, you may get a question regarding explain surcharge. So you should write surcharge is an additional tax. It is a tax on tax. After calculating the basic income tax, on that basic income tax, again tax will be calculated. So it's a tax on tax. So why the government is applying surcharge? If the government temporarily requires some extra funds from taxes. Temporarily, the government requires some additional funds, additional revenue from the taxes. The government will apply surcharge. The surcharge will be applied only to the rich people, high income group people. Not medium income or low income. Only high bracket income groups surcharge will be applied. So who are called high income group people? A person whose total income exceeds 50 lakh. Remember this. If the total income of a person exceeds 50 lakh rupees, he has to pay surcharge. He has to pay surcharge. Now you can see here 50 lakh, more than 50 lakh. Up to 50 lakh, no surcharge. Exactly 50 lakh rupees total income, no surcharge. Over 50 lakh rupees, surcharge will apply. So more than 50 lakh, up to 1 crore. Up to 1 crore. So 50 lakh to 1 crore, 10% is the surcharge rate. So whatever tax you will get, this basic income tax you will get. Oh, sorry, after basic income tax you get. So after calculating basic income tax, on this basic income tax, 10% is the surcharge. Suppose you got basic income tax 1 lakh rupees. Suppose you got basic income tax 1 lakh rupees. So on this 1 lakh rupees, 10%, 10,000 surcharge will be added. So 10% is the rate if the total income exceeds 50 lakh up to 1 crore. Second, if the income increases more than 1 crore, up to 2 crores, the surcharge rate is 15%. If the income is more than 2 crore, up to 5 crore is the total income of that person, 25% is the surcharge. If a person income is more than 5 crore, over 5 crore, surcharge rate is 37%. So these are the rates of surcharge applicable. Remember, up to 50 lakh rupees income, no surcharge will be taken, will be calculated. That's it. Now come to tax rebate under section 87A. The lower income people, the lower income group, the Income Tax Act has given some concession in the payment of tax. Some concession has been given in payment of tax to lower income group people. So Income Tax Act says if an assessee is having a total income of up to rupees 5 lakh, up to rupees 5 lakh, not more than 5 lakh, up to rupees 5 lakh, tax rebate will be given under section 87A. So how much tax rebate? List of the following two amounts. Actual income tax or rupees 12,500, whichever is less. So actual income tax or fixed rupees 12,500. This 12,500 is the fixed amount fixed by the Income Tax Department, Income Tax Act. So Income Tax Act has specified 12,500 fixed amount or actual income tax. Whichever is lower that will be allowed as tax rebate under section 87A. So this tax rebate will be deducted from basic income tax before surcharge. Before surcharge, we have to deduct tax rebate under section 87A. We calculate basic income tax. From that basic income tax, we deduct tax rebate under section 87A. But remember, when this tax rebate under section 87A will be allowed only if the total income of the person is up to rupees 5 lakh. Up to rupees 5 lakh, not more than 5 lakh. If the income is more than 5 lakh, no tax rebate under section 87A will be given. That's all. So here I conclude this video. Hope if you are satisfied with my lecture, give a like to the video. Share my video with your friends, with your group, so that more students can watch the video and enhance the knowledge. And give your comments on these videos. And lastly, do subscribe my channel if you have not yet subscribed. Inshallah, I'll continue the next topic in the next video.